Hi, John. Good to be here. My name's Ajay Agarwal. I'm a partner with Bain Capital Ventures.
Ajay, thanks so much for making time to join us on the Navi podcast. Very excited about the conversation, dive in a little bit further about what you're currently building and doing with Bain Capital. But before we do that, give us a thumbnail version of your career prior to that.
I grew up in Pittsburgh, Pennsylvania. My parents were immigrants, and I moved there when I was a year old. Ended up going to college on the West Coast at Stanford. I majored in electrical engineering. My sophomore year, I met a classmate named Joe Lemont, who was starting a company selling CRM software to startups up and down El Camino. And I decided to join him and build that business. We built that to about $1 million in revenue. He then dropped out to start a second company. I much to the happiness of my immigrant family, did not drop out and got my degree. And a few years later, I did a few years in consulting and so forth. And then I rejoined Joe at his second company, which was called Trilogy Software, as employee 18. And Trilogy was building business software to help companies that were selling complex products have a software tool to help them configure, price, quote those products. A space today called CPQ. I initially ran product, and then over time ran product and go to market. And that business scaled to $300 million in revenue during the 8 years I was there down in Austin, Texas. Joe's an incredible founder and entrepreneur, and it was an amazing journey. And then from there, I joined BCV, Bain Capital Ventures. We are an early stage and growth stage technology venture fund. I focus primarily on early stage software companies, business software companies, and have had the pleasure of working with an amazing group of founders and companies such as Kiva Systems, which automated e-commerce warehouses, now part of Amazon. Companies like Sendgrid, Gainsight, and Clari. Classic parts of the core sales and marketing and customer success stack. And businesses like Bloomreach and ShipBob that are bringing cloud software to the growing e-commerce space. So that's a bit about me, and excited to get into the discussion.
Well, what a journey, and really appreciate you sharing some of the backgrounds and the personal story behind this. So going from you've been part of a few startups as an operator, co-founder, and then the transition onto the venture capital side, to the dark side. Tell us a little bit more about that process. How did that come about as you're operating, leading the organization? And then you've obviously had a lot of success there, but then making that transition or the overall decision making go into the investment side. Tell us a little bit more about that.
Yeah, I mean, when I left Trilogy, I wasn't necessarily looking to be an investor. The opportunity with Bain Capital Ventures came about a little bit serendipitously, and I have to say that the first few years making that transition was difficult. When you're in a startup, you're making decisions every day. You feel like you're moving the ball forward every day. You're part of a team. You really can't accomplish anything by yourself. It's all a very much a team effort. And so the sense of fulfillment, the progress, the results, those cycle times are very short in nature. You launch a product, and then you can see if the product's working, and are you selling it, and are customers loving it. The venture industry, what I learned when I got here is the time horizons are stretched out pretty dramatically. You might meet 500, 1,000 founders in a given year, but invest in 2 or 3. And so most days, are fun and interesting, and you're meeting amazing people, but you don't necessarily feel like you have any tangible results that you can point to. And then when you invest in the company, that's the start of what can be a 7-10 year journey. And oftentimes, you don't really know if this company is going to be one of those special outlier companies till many years down the road. And so the cycles, the patterns, the sense of feeling like you've delivered results just take a long, long time relative to the operating world. And so I think that getting adjusted to that was it was difficult.
Mhm. Right. Yeah, absolutely. That's definitely an interesting perspective on making that transition. But at the same time, just that experience alone as a founder operator, I would imagine that comes in super useful, especially when you're trying to build those relationships with the prospective founders that you're considering of investing in. So there's probably a lot of that relevance in terms of you've been there, you've done that, versus just somebody who's coming as a traditional investor, so to say.
Yeah, I mean, sorry, go ahead, John.
No, I was just going to take that a little bit further from a standpoint of just how has your personal investment thesis evolved as you first started when you made the first transition as a founder operator till now, a little bit more of an experienced, investor. Tell us a little bit more about that. What are some of the things that you're very passionate about when you make those investments?
Yeah, I think in some ways, the world's changed so much, over the course of the last 2 decades. There's been so much technology disruption, but I think some of the core fundamentals around how I think about investing and startup building have remained the same. One of the things I learned at Trilogy was the importance of hiring great people. We were renowned for our college recruiting process. We hired at our peak 300 to 400 students right out of undergrad to come work for us. And the process of hiring and judging talent and onboarding people, I think was world class. And so I think I've taken those lessons into this job because at the end of the day, especially for me as a seed and Series A investor, what matters the most is the founders and that founding team. And oftentimes at seed stage, the actual idea evolves quite a bit. The markets that they're going after can be very dynamic. You don't know how things are going to play out, but you can learn a lot about the founding team. And for me, it really is that conviction after spending time with the founder that we collectively want to go on this 10-year journey together. And it really is a journey. There's so many ups and downs. Even the best companies I've been a part of, there have been dark days and stressful moments. And I think having a relationship with the founder in both directions where there's a level of trust, there's transparency, there's humility on both sides. I think that's critical. We're certainly in an environment now where these funding rounds are happening, in hours and days and so forth. But I still think having an opportunity, if you're a founder, to spend time with a prospective investor outside of your fundraise process, in advance of your fundraise process, to figure out who that partner is going to be, I think is so critical. So I think for me that has been the foundation for how I think about investing. And 20 years in, it's still the foundation and by far the most important thing.
Those are very interesting points. And as a founder operator myself, serial entrepreneur, I've been on the angel investing side for quite a few years. And when I first started in that, I was just taking that experience when I was fundraising for my own startups and just basically observing how other prospective investors or the VCs were behaving, or the types of questions they were asking. And that really kind of translated to me formulating my own investment thesis or my own discipline, so to say, because I put a lot of emphasis on that so that then I don't just chase every other trend that's out there, that I stay in my lane. That's, especially at the stage where I've been able to invest in, extremely early stage, probably even way before stage that you play in, being that probably one of the first lines on the cap table. Those conversations with founders become of utmost importance because I want to be a friend to a founder, not a parent, and be able that be that mirror so that when things go wrong, and also what you've talked about, that long-term journey. A lot of times there's that misconception that we see in the media all these great success stories, but a lot of times it's 7 to 10-year journey, like you said. And is this the type of founder I can get in trouble with together, down the line? For me,
That's right.
that's exciting. Which leads me to the further point In terms of some of the evaluation frameworks that you may utilize these days, or what has evolved through the journey when it comes to evaluating the founders, because that's the first you meet, and at the stage you're investing, probably that's one of the main decision making criteria in terms of who the founding team is and what they're all about. Can you speak a little bit more about that process and what you look for?
Yeah, I mean, I think what we look for, first and foremost is, a big vision. We're what we do and where we're focused at Bain Capital Ventures is we're looking to fund the next generation of some of the most disruptive technology companies that are going to be built. And so it really does start with, what is that vision, and why is it compelling? Why is this particular space going to be reinvented or created from scratch? And what we find, I think, with the best founders is they're able to articulate what the future is going to look like, but they have the detailed, set of points to convince you that their vision is right. Many times you can meet a founder with an incredibly compelling vision, but as you drill into it a little bit, it feels rather thin. And I think our best founders, the ones we get excited to back, they've got that vision, they've got that vision, that view as to what the future is going to look like. But as you drill into it, their depth is incredibly strong. I remember, when I first met Mick Mounts, who's the founder of Kiva Systems, and Kiva was a pioneer, in the sense that, it was a hardware, software, robotic system to, revolutionize e-commerce warehouses. And Mick was a domain expert. He'd been at Webvan. He'd seen how expensive it is to have human beings individually pick, items and put them into a box or a tote. And he, articulated this incredible vision of Kiva, and he had this brilliant insight, which was, in a typical Amazon warehouse, 90% of the time a worker's spending is walking to the shelf, because you have 1 million square feet, you have 10 million products, and so those workers are literally walking miles. And his insight was, instead of having the worker go to the shelf, let me create a system where the shelf comes to the worker. And so if you can eliminate that 80-90% of time that's travel, you can now optimize that worker's time on actually just picking the item and putting it in the tote. But what was amazing about Mick was incredible vision. He could articulate the ROI, why this needed to happen, the why now. As e-commerce, this was back, in a few years after the dot-com bubble, why e-commerce was rising. But you could also have a detailed discussion with Mick, as to why the robot he built was, I'm going to forget the number, but 32 inches in length, and he could explain to you that 32 inches was the exactly 1 inch bigger than was required to be able to take a standard carton of items and stick it onto one of his shelves. And 32 inches had a certain turning radius that allowed you to pack a certain density in the warehouse. And so that ability to go from 50,000 feet, the vision that he could articulate to the CEO of Staples, all the way down to, him understanding why the robot needed to be a certain width. That's what we see in the best founders. That it's an incredible range, frankly, to go, that whole span.
Yeah, that's a great example as far as what to look for in a founder. And we do a lot of surveys with our listeners, polls in terms of who's coming on the show and what types of questions to ask. And one of the questions that was the most kind of requested through our audience was asking you in terms of your anti-portfolio, meaning what are some of the investment misses that you had experienced that you probably regretted down the road, and speak a little bit further in terms of if and how that impacted your investment strategy or the thesis in general, and what were some of the lessons learned out of that?
Well, there are many, and it's the nature of this business that we get it wrong all the time. And yes, I think it's certainly an exercise we go through to take those lessons learned. We had an opportunity, back in, I think this must be now 2011, 2012, to be part of a seed round at what became Pinterest. I and a couple colleagues had a meeting with the founders, and we were blown away. I mean, the vision was phenomenal. And given our experience in e-commerce, it really resonated with us. But at the time, we were very focused on only doing Series A's, and so we ended up, and who knows if we had decided to pursue it, if we would have won or not, but we ended up bowing out because it was a seed and not a Series A. And my lesson around, and now obviously today we go seed all the way through growth, and but my lesson learned on that is, if you meet a founder and that founder is incredible, and for some reason the nature of that investment may not fit our particular model, is to push on it and figure out, is there a way we can get involved here? And I think I was too quick at the time to say, we don't do seeds, let's move on, as opposed to, this founder is amazing, this opportunity makes a lot of sense, let's find a way to do it, even though it may not be strictly down our our core model. Now, again, obviously today we do seeds and Series A's, and 88% of our investments over the last 12 months have been seed and Series A. So our firm has evolved dramatically since then. But there's going to be the next thing that may feel out of our comfort zone, or a little bit different. And then I think our mindset, and certainly my mindset, is very different, which is, it's a great founder, let's find a way to get involved.
Right. No, that's very interesting. That's a great example. Thank you for sharing that. Early on, you've mentioned some strengths around recruiting and being able to surround yourself with the top performers. In terms of helping your portfolio companies, or the founders that you work with in talent acquisition space, especially in this current market, extremely competitive when it comes to finding, sourcing, recruiting the best people, especially in technology. We all know how difficult that is. And then another layer, the war on retention, is also becoming real. How do you think about that? What are the conversations you're having with your founders in terms of being able to help recruit and build the teams around, with to be able to deliver on that vision that they're trying to build?
Yeah, I mean, I think the first part of it, and really the upstream part of it that you have to start with, is the vision and the culture. And if you don't have a compelling vision and you don't have a strong culture, you can use every tactic in the book around talent, and it's going to be hard. And so we encourage companies at the seed stage to really be intentional about what their culture is, what they want it to be, intentional when they bring employees on, to make sure those new employees are bought in to the vision and the culture. And I think it's incredibly important, especially in today's world, where increasingly the vast majority of our companies and their employees are remote in some way, shape, or form. So you don't have the benefit of everyone being together and the camaraderie that comes from physical co-location. And even for the companies that are physically co-located in this environment, in the pandemic, you don't have that. And so I think it really starts with vision and culture, and be able to communicate that in a world where your employees are distributed. I think step two is, for your company, figuring out, is there some scalable approach you can take that where you can go deep, where you can be really good at it. In our case, it was college recruiting. We said, this is a trilogy. We said college recruiting is going to be our scalable way of hiring people. It won't be the exclusive way, but it's going to be the thing that we are better at than anyone else on the planet. And so we built an entire competency around being at these colleges, identifying, we got to know the TAs at Stanford who taught CS 106A, and had them tell us who their favorite 5 or 10 students were, and we did the equivalent at every single, top CS university in Canada and the US. But then we also had to think about the fact that since we were hiring straight from college, we needed more extensive training program when they got to Trilogy. But it was really an end-to-end system that worked incredibly well and allowed us to scale the business. And so I think, for each founder, you've got to figure out what is your angle. Is it we're going to pick a certain geo that may be less less popular, and really go deep there and build that as a competency. There's so, or maybe it's a certain set, certain networks that are maybe underpenetrated, that we're going to try and tap into. And so I think a lot of companies just try and do the standard playbook that everyone else is doing, and they spread themselves thin. They try 18 different tactics. And I think the better way is to pick one or two things, go deep, and see if you can, utilize tactics that are somewhat unique, relative to the field.
To double click on that in terms of recruiting for your own company, for your own teams at Bain Capital, what do you look for when you interview or look at candidates, and more specifically around, not so much around the questions that you ask, but when you hear responses from the potential candidates that's going to join your team, what do you pay attention to? What are some of the flags that really, light bulbs go off in your head that makes you think that, yeah, this is the type of person that will succeed here? Because the reason I ask is I've been on all sides of the equation when it comes to interviewing. And I noticed that a lot of interviews are focused too much on what are the weaknesses that we can tolerate in that particular candidate versus this is the strength that's missing on our team, and is that candidate able to fulfill that? Speak a little bit more from that perspective for your own teams.
Yeah, I think the thing that, when I interview someone to join our team, whether that's as, a young investor or a more senior investor, the thing I look for is, do they love technology? I mean, are they really passionate about it? Because at the end of the day, we're helping founders build companies. Our founders, by definition, are immersed in technology and love technology. And so if you come into this, this job and view it as a financial job, you're not going to be successful. Certainly not here at BCV. So the folks that I get excited about are the ones that truly love technology. They love startups. They love founders, and you can see that in how they talk about it. You can see that their eyes light up. The examples they give, the stuff they do in their free time, that is truly, I think what matters. And I think for any company, I think that concept can be extended because, you want employees that are passionate and have that passion, whatever that passion is, align with whatever your mission is. And if you have that alignment, the odds of success go way up. Certainly someone's got to be qualified and capable and so forth, but business is hard, work is hard. The world is competitive. Every industry, whether you're selling software or you're at a venture capital firm, is 100x competitive, more competitive today than it was 20 years ago, 30 years ago. And so you're not going to survive or thrive or get through the hard weeks unless you love what you do. And so that's the number one thing I look for, which is this person going to love what we do? And I think too much of interview of the process and the instincts of all of us can sometimes be focused on, is this person capable? But I think that's only half the equation. So that's what I look for and what I care about. And certainly when I meet someone with those characteristics, I walk out so excited, and that's the feeling you want.
Right, absolutely. Those are definitely great points you're making in terms of the framework for evaluating potential candidates. I'd love to get a sneak peek into Ajay's crystal ball in terms of the trends that you're personally excited about to what's coming next. I mean, we've seen all kinds of new trends and things pop up through the past couple of years as we all have to shift into the fully virtual environments. What are some of the things that you're personally excited about? What's coming next? Whether doesn't necessarily have to be from investment standpoint, but just overall some of the trends that you may be personally following.
Well, I think what's interesting and what I've observed over the course of my venture career is that the oftentimes the trends that venture capitalists and the pundits get excited about are often right, but they take a few years to play out. And so the trends that I'm excited about are not new trends, but I think we're still in the early innings of them playing out. And I think there's so much more innovation yet to happen around these trends. And when I look back, a lot of the most interesting companies in the prior trends didn't happen right at the outset of the trend. It was a few years in to the trend where some of the biggest companies get built. And for me, one of the biggest one is this idea of remote work and hybrid work, because we still don't know what the steady state's going to be. We're still in the pandemic. We don't know what the world's going to look like, when this virus goes away and we return to some form of normalcy. Certainly a lot of companies are remote first, but I think all the tooling required to run a company that's remote, most of it is still not in place. Yes, certain categories like remote payroll and benefits and things like that, I think many companies have exploited that opportunity massively. Virtual events and conferences, we've seen some companies really take off. But I think the majority of the tooling around collaboration, communication, onboarding, training, are yet to be built. And so I think that's an exciting trend. I think the second one, which again, this is not a new trend, but we're still in the early innings of this happening, is the move to product-led growth. And if I think about my days, selling software, running go-to-market, 25 years ago at Trilogy, it was top-down sales. You try to get to the CEO and convince them to spend $10 million. And now, at least the startups we're funding, the majority are 100% bottom up. It's developer led, it's API first, it's bottom up, it's land and expand, it's free trial with some kind of expansion, consumption, on the back end. And when you think about the stack that's been built around marketing automation, CRM, customer success, all those tools were built in a different world. They were built in a world where most companies were sales led, where a salesperson, whether a BDR or an account executive, was on the front lines of trying to penetrate an account. Now it's very different. And so we're seeing a lot of startups emerge in this arena. But again, I think the full picture is going to become clear over the next few years. So it's an incredibly exciting area where, how do you even think about the record inside a CRM? Historically, it was an opportunity record, but now what is an opportunity? Is it a user? Is it a team of users? Is it a department? Is it a company? Even these fundamental notions that have been true for 20 plus years are being called into question. So I think there's a lot of opportunity here, and we're seeing a tremendous amount of innovation happening in this space.
Yeah, definitely very exciting observations, and we've been living in this very interesting world with so much unclarity and unpredictability in terms of what's coming next. So it's always interesting to hear different perspectives on as far as what's coming next. So I appreciate you sharing that.
Yeah, absolutely, anytime.
In terms of just moving on to the last segment, more rapid fire, your content diet, what is that looking like? What do you consume on a daily basis just to keep yourself educated, informed, ahead of the curve? I'm just always fascinated with strategies to keep your mind, isolated, at the same time being very selected, because with so much information being thrown at us through all these mediums, how do you think about that? What are the sources that you consume?
Yeah, I mean, in terms of what I consume, work-wise, I mean, I think it's the standard stuff. Twitter, and LinkedIn are probably the most uh, common sources that I use to consume content related to technology and startups. But frankly, the most interesting content I get from a work standpoint is talking to founders, and so at some level, all of that stuff, on social media is interesting, but it's diminishing returns and a lot of it's noise. But talking to founders, the people who are closest to the bleeding edge of innovation, the ones that are in front of customers all day long and prospects, that's where I learn the most and where I try and spend the most time. Outside of the work stuff, I do read a lot. I read a lot of fiction and nonfiction that has nothing to do with technology, and that's really just a way to you know feed different part of the brain, turn off the brain, and I think you recharge mentally, and so I love it. I enjoy it. What I find about fiction so interesting is that, in many, the world's changed over the last 5,000 years. So much history's happened, but human nature, and aspects of human nature are very fundamental. And you see that over and over, both in history, and in fiction, and I think that's it's fascinating to see many of those patterns. So I enjoy it. It's a passion of mine. In addition to rooting my Steelers on in every fall, which that alone creates its own mental stress. So that's what I enjoy.
That's exciting. We could probably have another whole episode dedicated to
Yeah,
that. Uh,
definitely.
Last but not least, is there a book that you've recently read that was just you absolutely loved, or is there a book that you always recommend to others, and why is that?
Um, my best my favorite book around innovation is an old one but a classic, which is called Soul of a New Machine, which is a story about innovation, a small group of innovators inside Data General, which was an old computer company way back when, in the Northeast, and it's a classic. It's one of the best books about technology and innovation that I've ever read, and it's still relevant and current. And then I think the other classic that's a must read for everybody is The Innovator's Dilemma by Clay Christensen. And it's the level of depth that he goes into on the history of the steel industry and the history of the computer storage industry, and the same pattern of innovation disruption happening. And you see this in the world I invest in software. You see these categories get built, and we saw this with the shift from on-prem to the cloud, these giant companies that got built in on-prem, and they couldn't make the transition to the cloud, even though it became known and understood. The incumbents are always too late. And so for a venture capitalist, and certainly for a founder, if you're going up against a big incumbent and it seems daunting, read The Innovator's Dilemma, and that'll give you faith that there's a path to victory, and it can be done, and it has been done. It's happening over and over again. And even the incumbents today that seem insurmountable in terms of their strength and scope, it's going to happen to them too. It's inevitable. So that's what I love so much. It's a cycle of destruction and rebuilding and innovation, and that is the groundwork for the next generation of founders that we're looking to fund and back and partner with over the course of the next 10 years. So couldn't be more excited.
Those are great recommendations, and for our listeners, we'll make those titles available in show notes. Ajay, I can't thank you enough for your time today. It was very short and insightful conversation. I personally learned quite a bit. what I love doing with all the guests on the Ivy podcast is do a follow-up recording in about a year where we revisit a conversation from a year ago and basically see if everything we've discussed still makes sense, still applies. So I definitely look forward to doing that with you as well.
Would love it. Good to see you. Thanks for having me on, and always fun. So enjoy the warm weather down south.
Thanks so much.